Peter Rose, Longwood Currency Trading. Good morning. It's a cold February 2021 day. It's probably 8 degrees Fahrenheit. Not good. I just got back in from doing a grocery store run, and I wanted to sit down and make a follow-up comment to a video I did the other day on the elements of psychology and how they play into trading. I didn't really have anything new to offer that Mark Douglas in Trading in the Zone wouldn't have had to say, other than the thrust of that video was to pick the mode of trading that you want to do, whether that be long-term or short-term, based on your psychological profile, your personality. If you're an aggressive person and you're looking for action and stuff, don't be trying to trade up on a long-term chart. Do a scalping or at least day trading. Corresponding to that, if you're a planner and you have a lot of patience and you're taking a long-term view of, for example, the economic cycles of the different pair of countries that you're working on, you don't belong down on the short term and doing day trading or doing 4 trades a week or something like that. You need to be up on the higher time frames. That was the takeaway that I had on that video. But you know, all of the discussions that traders have about psychology has to do with the bad stuff. You know, we're our own worst enemy, and you have to learn to fight your emotions so that you don't overtrade or you don't, you know, I've talked about anticipatory trades. I've talked about the problems I have with when I don't follow my rules and get out with my short stop that I have. And I just for some reason, my personality just lets it run. You know, I go to a higher time frame and I go, well, that's okay. You know, that happened to me the other day. You know, I lost 2% on a trade. So, you know, we always talk about those negative aspects of the psychology and what shitholes we are as people in trying to beat the market. But there's a lot of good aspects to us as people and our psychological makeup as to how we can trade. I mean, look, if we didn't have a personality that was wanted to learn how to manage risk so that we could profit well. I mean, I took risks when I got into real estate investment and profited from that. Some people get in and they don't know the rules of the game, and they lose money in real estate. They lose money in currency trading. They lose money in just starting a business. You know, the percentages are all there, whether it be currency trading where 90% of the people lose 90% of their money in 90 days, which is the statistics for currency trading, and it's only because of the volatility of the markets, the leverage that you can get in, the ease of access and whatnot. You wouldn't have that high of a failure rate, but you'd have probably 80% fail. You know, if you're starting a business or going into real estate sales or insurance sales or any kind of an activity like that, most of those folks wash out within a year and a half. 80% of them get flushed out. You know, it takes time. No matter how good of a person you are, it takes time in those businesses in order to build up a clientele. I mean, that's really what you're doing in services businesses or even in real estate, is to who you know and what deals are and all that sort of stuff. But it's our willingness to acknowledge risk and say, okay, well, what do I need to do in order to mitigate those risks so that I'm going in with the highest probability of success? That's a psychological profile. Not everybody has that. A lot of people are so risk averse, man, they don't even want to get out of bed as a psychological abnormal condition. But there are a lot of good things to us as people that we can apply to our trading. We have hope, which is a negative. We've talked about hope as a negative thing. Oh, I hope the price comes back. But we hope that we're going to be a successful trader. You have to back that up then by doing the necessary study to learn about the markets and trading. And you have to be willing to look at the chart, and based on your knowledge of the fundamental basis of the two pair of countries, chart patterns, or indicators or whatever it is that you use in order to look at a chart and determine whether there's a trade there or not. That hope of success is based in that analysis that you have learned to do against the chart, against the patterns or whatever it is that you see. So that's a good thing. Fear is a good thing because it should keep us out of the shit. We tend to, in talking about the psychology, and Warren Buffett talks about this, is that you're fearful when you should be greedy and you're greedy when you should be fearful. And that's the negative view of it. But what happens when you're greedy at the right time? And what happens when you're fearful at the right time? So you can't look at the market as a fearful thing. It's no more fearful than crossing the street or getting in your car to drive down and go to the grocery store. There are risks involved in everything you do. I went out to take a walk with the dog in the woods. We had a freeze up here and snow and been sleeting and it was really slippery. And so rather than putting my tracks on the bottom of my shoes, I went out just with my boots and walking around with the dog, and it was really slippery, and I broke through the crust of the ice and whoa! And there was a tree branch here, so I grabbed that and I didn't go down, otherwise I'd have face planted in a pile of crusty snow. So if you don't understand what the risks are and understand what tools you have available to you in order to mitigate those risks, then being greedy at the right time still isn't going to do you any good, because you don't have the foundation behind you in order to be successful and to take advantage of that trade when you're trying to be greedy. By being greedy, I mean you get into a trade, you've analyzed the situation, you think it's going to go 30 pips, and yet you see that there's a major structure or whatever it is that you look at, and you say, yes, I could get 100 pips out of this thing. And that thing starts to take off, and you've got your position, you add a couple to it, and it's going to beat the band, and you can see that it's going to hit it's easily going to hit your target. So you load up on more, you dump it all onto the plate, and because you know it's got the momentum at least to go to your target. And when you get to your target, maybe you'll pull off a few to lock that profit in. You'll bring your stop up, and you're going to, as the price increases, you're going to add to that. That's greed. What do you need to be fearful about? You're fine. The only time you would need to change your greed to that of fearful, and that's not a negative thing, you see the price start to begin to stall. You say, well, it's not at the structural point that I thought it was going to be, but it's stalling for some reason. You don't have to ask anything more than that. You don't have to try to figure out what the fuck that reason is. Price is stalling, you become fearful, and you exit the whole position. Because you know what? If it continues on, you can always get back in. So the greed took you up there and maximized that position win for you by probably 70% by adding in lots as the price was moving rapidly. And what's the negative of that? The negative of it is a person who's fearful at the wrong time, and it sees that price, I've got a 25 pip profit target, and it's up 15 pips, and I get, oh, I've got 15 pips, I'm going to take that. And the thing goes to 40. That's the negative part of fear, is not letting those profits run. You don't let the profits run. You manage the profits. And as long as there's profit to be made, you add your position, or you hold at least. It's I think, counterproductive for us to worry and wring our hands about all the nasty shit that can go on. If you're doing that in your trading, it means that you haven't properly prepared. If you get into a trade and you're fearful, if you're finding that you're fearful at the wrong time and you're greedy at the wrong time, that means just one thing. You haven't done your preparation work, and you're not confident about your entry. I mean, you can get into a position and it can go in your favor, right? But if you weren't really confident about the reasons why you got into the trade, you're going to be fearful about that. Oh, it's working for me, but I'm afraid because I didn't really, it was like I flipped a coin, it was heads, and so I entered the trade. If you do your work, then you don't have to have those fears. You don't have to be trying to figure things out. If you're trading and you're in a trade and you're trying to decide what to do, then you haven't done your work. There should be no decision process. You should be no trying to figure out what to do once the trade is on. There should be hard and fast rules. And you're probably sitting there, fuck you, Peter, you go out, tell me what the rules are. Well, I can't tell you what the rules are. I'm a short-term trader, bordering on scalping. I enjoy what I do, and once I'm in a trade, I'm not trying to think about anything. I'm not worried about anything. I have two rules that I go by. Once I'm in a trade, I got two rules that I go by. So now those two rules have some corollaries and stuff, but they're simple. There's no reason why you can't do the same thing. I think the problem with most traders is they look at another trader and they say, gee, that guy's got good rules. I'm going to use those rules. I'm going to do it that way. And it's not going to work for you because that person's personality may be totally different. Their psychological makeup may be totally different. That enables them to look at a position differently than you're going to be able to look at it. So you can't read a book or watch what somebody else does and say, oh yeah, I'm going to do that. I think half of the money that I've lost is because of my stupidity, and the other half is because I've been trying to mimic what somebody else does and that they're successful with. And you don't want to argue with somebody who's successful and say, well, I'm going to do it this way. I'm not going to do it the way that you do it. You're successful, and I see that you're successful, but I'm not going to do it your way because there's certain aspects of what you do that I'm not comfortable with. But you have to understand what your psychology is in order for you to be strong enough to say, I like what you're doing. I'm going to take a piece of that, but I'm going to do it my way. Because you know what? If you have a sound methodology based on sound principles and you understand probabilistic analysis, then no matter what your system is, the stuff that you do, you're going to come out okay. But you've got to look at it from the positive aspect of it. The psychology, the positive aspects of your psychological makeup should enable you to fulfill those guidelines that you've drawn up for yourself that are theoretical until you actually hit bid-ask. Peter Rose, Longwood Currency Trading. Have a great day. Have a great trading day.